Hello traders. The title of the video is Elliott Wave Indices Trader reveals his Russell 2000 Index Wave Analysis for 2019. Alright, so recently I have been analyzing Sensex, Nifty 50, alright, Nikkei 225 at 24 Elliott Wave. So you may check out those videos because the reason why I'm recording those videos, I'm looking at major indices, alright. So at the beginning of the year, it's very important to analyze the major stock indices, alright, because why? They are market indicators. They can tell us what is likely to take place in 2019, and if you are trading stock or any other financial instrument, the first stock index that you must refer to, whether you are in India, in Pakistan, in China, Europe, or in America, you want to check the S&P 500 index. You want to thoroughly analyze the S&P 500. And then you want to analyze other stock indices like the FTSE 100 or a DAX 30, CAC 30, Nifty 50 or a Sensex. Today we are analyzing Russell 2000. Alright, so this is what we do at the beginning of a new year. Another thing that we do at the beginning of a new year is that we want to analyze also the market leaders. Alright, so if you go to Day Pro Traders YouTube channel, I have started recording videos when I'm analyzing the market leaders for the Dow Jones Index. After that, I will be analyzing the market leaders for the Nasdaq 100. So those are the things very important. So beginning of the new year, you want to check the major indices, and also you want to analyze the market leaders. So when Apple stock goes down or Google stock goes down, the market is likely to be bearish. Recently, there was a warning from Apple stock to the market that they have reduced their forecast for their earnings. So their earning was projected to $89 billion. So they reduced it to $85 billion because of the Apple stock went down. Dow Jones went down, major stock went down because a market leader, Nasdaq 100 index leader, is becoming bearish. So a lot of traders are trading the stock market, but they don't know what are the forces that are moving the market. So stock indices, goes down. Most stock will go down, alright. You want to check them. Market leaders are bullish. They can push the market up, alright, or down. So that's why we are analyzing Russell 2000 today, alright. So very fast, how long have I been talking to you? Say, George, alright, 3 minutes so far, blah, blah, blah. Very important, blah, 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 So I've done my homework. It's without too long story. This is my preliminary wave count. Feel free to disagree with my wave count, alright? Compare your wave count to mine and make your own decision. This video is for educational purposes only, alright? So first wave, somewhere from 1988 to 1998, 10 years. Hopefully, so this is enough data. I'm liking TradingView, so they have a lot of data here. 1988, that's a long time in the life of human beings, so they have enough data here. I like that. Unless there are more information here that you don't have, but I can work with this for now, alright? So no one can deny it, the price was going up, since 1988. So how do we know? It's forming higher lows and higher highs. So here you can see that there was this low. He retested that low. That's what we call validation of a key level as a support level. Here again in 2009, he validated that level again triple time. So this level, so if you are trading Russell 2000, you have to understand that this level in the zone, not precise, in the zone of 358 is a very, very important support level. So from there, the price continues to display higher lows and higher highs. So we can say that from 1988, Russell 2000, talking about long-term trend, is bullish, was bullish. Long-term trend was bullish. So medium-term trend sometimes was bearish, but long-term trend is bullish, So where are we now? Talking about long short-term trend. So when you are analyzing, okay, you are using Elliott wave principle, you want to always remember what we call the short-term trend, the medium-term trend, and the long-term trend. So don't ask me again to record a video about that because I've already done a few times. I think that 2-4 stock trader, so I'm not going to go back again, repeating myself again, and annoying other traders, all right? So when we are talking about short term, is relative to trading. So a day trader, short term is 1 day, all right? For a swing trader, talking about short term, all right, can be, all right, 2 days or a week even, all right? Position trader, short term can be a month, all right? And so it's relative to each person, all right? That's what I can say now. So first wave of a higher degree, so from here all the way up here. Feel free to disagree with my wave count. Second wave ending here. Some trader will disagree with my second wave, and I will say to them, if you follow our Elliott wave guideline, you can see that this price move from here. It went up all the way here, and it come back and cancel it. So if you disagree with me, all I will say to you is to just, as I told trader, I'm looking for something here, is just to cover this session. Just cover it. Because it's like it did not happen. You see this session here? You can just cover it like that. Because the price went up to that point and come back, forming a double bottom chart pattern. The same thing I say to traders when you are dealing with complex wave, you will see a lot of double bottom or double top. Cover them, and with that it will help you to see clearly what is happening. So that's done. Okay, I want to remove that now. I don't want to remove everything, I just want to remove that because I'm getting used to this. Don't laugh, my friend, don't laugh. I'm still learning it. All right. I don't want to remove all of it, I just want to remove this. All right, so you get a message. So this is my second wave ending here. So this move here. So normally, as we are counting wave, the wave count is one step at a time. At this point in time, they'll say second wave. They will be putting their second wave here, and when it started here, they will say, "Oh, third wave has started here." Now look, it come back and cancel it again. So when an impulse wave is cancelled by corrective wave, it's like a zero. You can cover it. Then again here, it start going. So from here, people say second wave. It start. People say third wave. Now it cancel it. So here it will start counting wave. So we say, all right, this is the third wave again. So here we will say this is the beginning of the third wave because this is supposed to be the beginning of the third wave has been cancelled. So by this one. So here we are saying, all right, this is the beginning of the third wave. All right, here again, you see. When a wave or an impulse wave or a trend has started, it doesn't mean that the trend will continue. The fundamental must support the trend can fail. This is something that sometimes traders don't understand. They say, oh, you say this is the beginning of the third wave, you are useless Elliott wave analyst. But the wave that they have forecast can be cancelled. And we go back to square one. It's not the forecast that was wrong, and the price did not validate it, okay? Did not validate, okay, the forecast did not validate the expectation, all right? So again, people say, this is the third wave, and here it is, here, it come back again and cancel it. So now you see, first time people say this is the end of this, this was called this point, second wave. So one step at a time, you see, so you here, you see, second wave, no more. What? No more, see, third wave, yeah, okay, good. Now cancel it. So come back here, we start again, say, third wave, all right? So you say, now your second wave, you will put it here now. The third wave, oh yeah, it cancel it again. What are you going to do about that? All right, you like that question? What are you going to do about that? Right? So then again, now this is the second wave. So from this vertical line to this point here, this is the second wave. So now again, now we say this is the beginning of the third wave. If, for instance, the price come back down all the way here, cancel it, we will put our second wave here. You see now? So we may talk about W, X, Y wave, blah, 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 but the whole point that we are making is that there was an impulse wave, and all these blah, 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 those are corrective waves. Feel free to disagree with my wave count. All right? So even if you say this is the first minor wave or the third wave, And this is the second minor wave of the third wave, but it shouldn't cancel it. But I also told traders that there are other area wave traders out there that think that the second wave can come all the way to the beginning of the first wave. And I disagree. I disagree because if you're going to have a trend, the second wave should not cancel the first wave. If it cancels it, it means that those who bought it at the beginning of the first wave were not serious, bullish traders. All right. Otherwise, the second wave should not cancel it. It can come to 78.6% in a desperate situation, but we don't want it to come all the way to the beginning of it. If it comes all the way to the beginning of it, and we want to give it a chance, we must put a big question mark on it and use it cautiously. All right? So now this is the third wave of a higher degree. We are expecting now the fourth wave. All right? I'm moving some line now. All right, so we are now in the fourth wave of a higher degree for Russell 2000. So for the Russell 2000, it's mimicking, it's almost like the S&P 500. All right, so we have done the Elliott wave analysis for S&P 500. So check our 2-4 Elliott wave channel. All right. So when I was doing the Elliott wave analysis for the S&P 500, all right, I did not, you see this point here, I did not call this point 2009, reference point 2009, I did not call this the beginning of the third wave. I put it here, the beginning of the third wave, this point here. Because if you look carefully, we have an inverted head and shoulder. This is the head, the right hand side shoulder, okay, and the left hand side shoulder and the right hand side shoulder here. So according to our Elliott wave count guideline, this is the first minor wave of the third wave, not from here. Otherwise, it will be 1, 2, 3, which is not the structure of an impulse wave. This, feel free to disagree. Even if somebody is calling here the beginning of the third wave, which they can do. It's just something going to our mind, all right, because of the structure of this one, 1, 2, 3. As an Elliott wave trader, it's not making sense in my mind. So I prefer to call it from here. Another trader may say it's from here. What is the difference? No big difference. You say, all right, but we all agree, after all the argument and the blah, 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 we all agree that this is the third wave. Do you agree? For 2009, S&P 500 has started the third wave, Dow Jones has started the third wave, Nasdaq 100 has started the third wave. Same thing we see for Russell 2000 has started the third wave in 2009. All right? Financial crisis, here you see. Okay? All right? So this is the third wave of a higher degree. Do you still agree or do you disagree? Now, in my mind, I will put, all right, in fact, my second wave here, but I'll leave it here for now because the internal wave of the first of the third wave, I'll start counting it from here. But if you look carefully, you will see that the second minor wave of that supposed to be the third wave of a higher degree almost come to the beginning of the first minor wave. But almost, all right? But I'm giving it a chance because it's a bit of exaggeration here, so I'll put a question mark on it at that point in time, or I put a question mark on it, but I can see that it managed to go up. But if you look carefully again, as this move went up, okay, this is something that I point out for Nifty 50 traders and Sensei traders. By the way, I'm very impressed by our Indian friend because there are two groups of traders that are following me. The Americans from Texas, Michigan, New York City. I'm speaking with Americans. I'm working on my Bombay accent. So there are American people following me and the Indian people. Recently, in the past, the American people were ahead of the Indian people. Recently, the Indian took over, the Americans. So the number of Indian people watching my video are now higher than Americans. So congratulations. So the competition is now on. So what is happening is that as the number of people in India start using internet, I tell you, there is a lot of opportunity in India coming up soon. In fact, you can see that a lot of companies are moving to India because of all the opportunity coming there. So something we need to keep our eyes on. So we need to cook, enough sauce, enough food for our Indian friend, chicken curry, chicken vindaloo, talking about many videos, for I will be analyzing Indian stocks, Indian, stock indices and also American stock, because those are the two groups that are following me. All right. Not many Europeans are following me. All right. Though I'm in Europe. All right. So something I point out for Sincere Nifty is that we see an inverted head and shoulder chart pattern, which we see also for the S&P 500. So you see here, so move up, inverted head and shoulder chart pattern. You see here again, move up. All right. Okay. You don't see the left hand side shoulder here. You see here, this section here, the left hand side shoulder did not show clearly, but the right hand side shoulder show here, and this is the head here. So you just want to shh. So the hidden left hand side shoulder is not there. But can I show you this is a hidden left hand side shoulder, this is the right hand side shoulder, this is the head again. Look again, price went up again. You see again, left hand side shoulder, okay. Or somebody may say this one instead, all right, and the right hand side shoulder there, or this one, right hand side shoulder, and the head. So the left hand side shoulder, the head, and again, the left hand side shoulder, the right hand side shoulder right there. So move up, inverted head and shoulder chart pattern, move up, inverted head and shoulder chart pattern. You remember when I was analyzing Nifty 50 and the Sensex, we see similar pattern. So the same thing we are seeing for Russell 2000. All right. So if you are trading Nifty 50, all right, and Sensex, you want to look at this Russell 2000 because there are similarity between Russell 2000 and Nifty 50 and the Sensex, because we are talking about fractal pattern. So sometimes those indices, one can be ahead of the others or one can be behind the others. So with that kind of discrepancy, we can use the one that is ahead, the structure of the financial instrument that is ahead, to forecast what is likely to happen to those that are behind. Talking about the similarity between the price structure between those currencies, the correlation between those financial instruments, but using the latency, and to forecast, the next price move. All right. So talking about the fourth wave of a higher degree, I'm watching my time. All right. Talking about the fourth wave of a higher degree, if we apply Fibonacci retracement to the third wave, so when am I applying the Fibonacci retracement? In this case, I didn't put it where I'm calling the first man away. Normally, I should start from here, isn't it? Because if I'm calling this one the first man away, I should start from here all the way up here. But I didn't do that. The reason why I did not do it is because this move the move that I'm calling from here, in fact, has started here. But for the Elliott wave count purposes, my third wave in my mind is starting here. But when I'm applying Fibonacci retracement, I start from here, from the low here, all the way to the top there. All right? So then I highlighted the 38.2% Fibonacci retracement level. So you can see that Russell 2000 is coming down. Will it reach that 38.2% level? Because the fourth wave is a shallow correction, not deep correction. Sometimes we do have deep fourth wave due to fundamental reasons, due to economy news, due to other external factors. But generally speaking, the fourth wave shouldn't go too deep. So it should stay above the 50% Fibonacci retracement level of the third wave. In fact, in my mind, personally speaking, fourth wave coming to 50% Fibonacci retracement level of the third wave, that's already deep. So that's why I put the 38.2% level. That level is in a zone of 1200. So how do you handle that? So the fourth wave, you want to sell, all right? Or you are giving priority to sell signal, but understand that the bullish trend is not finished. All right? It's not finished. People are still waiting for, right? People are still waiting for the fifth wave to start somewhere. But we want to watch the level 1200 as a support level for that fourth wave. If that level fell, I have also drawn on my chart a trend line. You see here, I connect the beginning of 1988, that low there, roughly, to this low here. I didn't put it all the way to the, just draw it roughly, right? Just draw it roughly. I draw that trend line, that's what I call primary trend line, all right? The secondary trend line is to connect the low of the second wave and the fourth wave, but because the fourth wave is not yet completed, we can't draw that. So that's the first trend line that I draw. Then I draw another trend line connecting the high of the first wave and the high of the third wave. Then what I've done, I divide it into two. So this is this vertical line here. I just choose the midpoint here, and roughly, I just draw a line through it that is dividing that vertical line into two. Roughly. Did I say roughly? Yes, I did. Not exactly, but roughly. Then they say, Joe, you are using that word so much. You love it. Yes, I do. I can't deny it. Can I? I can't. Okay, so that's the median line roughly. Okay, so if you break below that 1200, you want to watch that orange trend line that is roughly the median line between that trend line and this one here. Apart from those key levels, nothing should stop traders to draw trend line on their chart. So there is a trend line like this. Can you see that? You see? I'm just drawing it roughly because you see this point and not exactly all the way low here to the closing price here. That's another trend line there. You see the price came down. You see it touched now. It's going to bounce up a bit. There is another trend line. Should I do everything for you? You should be doing that yourself. That's why I say I should start charging you guys. Oh, traders say, Joe, you're talking about money again. Oh, I marked this video down. Okay, go ahead. All right. Okay, so here it is. You can connect this high and this high also. Leave it on your chart. And again, it's your chart. You can continue, or I can continue. If anybody say to you, why are you drawing so many lines on your chart? You just say to them, it's my chart. I can draw on it, yes or no. There's nothing they can do about that. Oops. All right. Okay, and then you place also the pitchfork tool on your chart like this. That's it. All right. So those are the things you need to do because you forecast the fourth wave. What are we doing now? Remember the next step? Map out the chart, draw the trend line, and then look for trading setup in the vicinity of key level. If there is a trading setup, you will implement a different time frame trading method. The area wave forecast is already done. We count the wave, first wave, second wave, third wave, fourth wave. Expectation that the fifth wave will start somewhere here. All right. I will remove that line. Okay, somewhere there. All right. After the fourth wave, we will expect the fifth wave. Yes or no? So it's not finished yet. All right. But in order to know where, so all we are doing now, we are just flowing with the price. So the first reaction of the fourth wave is happening. It can be any type of corrective wave. It can be a triangle. So people think, oh, this is the end of the fourth wave. It may go blah, 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 1, 2, 3, 4, 5, A, B, C, D, E. And you say, what are you going to do about that? People say, no, I don't know. You just need to map out the chart now, and you are just going one step at a time. There is a resistance there. Can you see? There's a resistance there at 1279. You see? And you just draw all this line, and you are just trading it. If it's going to go out, you will know. So it crashed down, retest the top of this prior high. Now it's bouncing up. Draw the pitchfork tool, draw the trend line. You see? This is what you want to do all the time. You can draw common set trend line. All right? I don't want to draw too many lines, but you get a message. Look for trading setup, all right, on the edge of a trend line, on the edge of a key level. If there's one, just implement a top-down trend. This is what people are doing here. So he retested the edge of the pitchfork tool and that orange trend line. Okay, this trend line is correcting this point and roughly through the closing price there. Retesting here. People who are now, you see where we are now? People are now implementing a different time frame trading method by going to the daily chart. This is the daily chart. That's it. See that orange on the trend line. Shh. So they are monitoring here. Did you see any trading setup? Common setup is broken. What's going on? You see a trading setup that's here. It is today. This is today. Breakable, retest, proof. So you see a trading setup. They implement a top-down trading method. All right. Daily chart. See, so you have done your area wave analysis, okay? You have done your area wave forecast. Now you want to get paid. How do you get paid? You map out the chart. You look for a trading setup. If you see one, you implement a different time frame trading method. If there is no signal, you don't buy, you don't sell. If there's no trading setup, there won't be any signal. If you see any signal, ask which trading setup has generated that signal. We are expecting a fourth wave. After the fourth wave, it will be a fifth wave. The prime must confirm the expectation before we just jump and buy and sell. And by that, we are timing the market carefully. First, we are using the area wave principle to time the market, okay, between forecasts. Or it's going to go down. Okay, this is the best time to sell. It's going to go out. This is the best time to buy. But in order to time it more, we use different time frame trading method to trade. So this will conclude our discussion today about area wave indices trader reveal his Russell 2000 index wave analysis for 2019. So for 2019, Russell 2000, we are expecting the fourth wave, and hopefully we'll see the beginning of the fifth wave. All in all, one should use different time frame trading methods in conjunction with the area wave forecast to tap the market more accurately. If this video has been truly useful to you, please let me know by giving us your beautiful thumbs up. If you dislike it, you say, George, a too long story, blah, 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 I'm not impressed, mark it down, alright? However, if you think this is an essential tutorial that can help other area wave traders, alright, feel free to share with your friend on Google+, Twitter, Facebook, and Tumblr, alright? If you have not yet subscribed to our channel, please subscribe to our channel today. Our channel is 24 Elliott waves in plural, all right? Digit 2, digit 4, Elliott waves, all right? YouTube channel, subscribe, and be sure to click on the notification bell so anytime we are about to live stream a pre-recorded video, YouTube will notify you 2 hours before the live stream will start, and also 30 minutes as I'm getting ready to watch it together with you if I am free, all right? Sometimes I post video first on Facebook, sometimes first on YouTube. My Facebook page is stochastic-market. Until the next time, enjoy yourself and be very happy. We are the GSTW 24 traders talking about area wave indices trader. Reveal his Russell 2000 indices wave analysis for 2019. Happy trading to you all. Happy New Year to you all. And I will speak to you soon. Thank you for watching.